Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, we're going to talk about this mansion tax in LA. And because,
Mansion as in big houses, not as in the congressman.
no, he's senator.
He's senator.
Joe Manchin.
Yes.
From West Virginia. No, Manchin. Here's the article. How sellers of LA mansions, and it's not even a mansion, we'll talk about that too, are dodging a tax to help the homeless. They're not paying their fair share of taxes. They're dodging, they're tax dodgers. They're selling their house and going to Canada probably to avoid the tax. Okay, here's the scenario. So there's a homeless problem. So some guys who work in government said, hey, I got a great idea. Let's tax all home sales over $5 million. And then we use that money and we'll solve homeless, because homeless can be solved with money, right? Okay, Juana, what are some of the specifics? Like, what's the timeline here? Like, what happened? Why did this thing end up being kind of a mess?
Okay, so they passed this tax saying that they would tax homes that sold between 5 and 10 million. They were going to tax them 5%. Homes that sold 10 million and more, they were taxing them at 5.5%. So. And the deadline for selling without having to pay this tax was April 1st. Yes, it has not been lost on us that it's April Fool's Day. And so lots of people went ahead and sold and tried to close before April 1st so they would not be subject to this tax. And then, of course, you know, there were lots of transactions leading up to this, but of course, starting with April 1st to now, there have been much fewer transactions because like with interest rates and other things, it just pushed a lot of transactions on the front end. And then, of course, this is now the back end, and there aren't very many transactions. Now, you know, properties still have to sell, and people, you know, still sell properties. But, you know, leave it to the people who have means, who generally did not acquire those means by not being educated, intelligent, and knowing their way around money, to find ways to work around this tax. So there are blog posts everywhere about what, you know, some of the alternatives to workarounds to this tax are. So there's a blog post out there about people.
We're going to go over it.
Okay, sorry.
We're going to go over it. Okay, here's the first thing from the article. Okay, so the measure imposed a 4% tax on properties listed between 5 and 10 million. And then it immediately jumps up to 5.5%, 10 million. So if you sell your house for 10 million, pay 550,000. If you sell it for $1 less, you actually get to put a lot more money in your pocket because you only pay a 4% tax. You put 400,000. So you put $150,000. You'd almost be dumb to sell the house for between 10 and like a 10 million, 150,000, right?
You know, but this is the same way that 1031 that properties for foreign nationals work, right? That if you sell your property for 300,000 or less, you don't have to have the tax withheld, but if you sell it for $300,001, then you have to have the tax withheld if you're a foreign national.
It's like $45,000. They just take it.
Right. So it's that sort of regressive tax policy, if you will, that just doesn't make sense.
Right. So there were people that literally were putting in their offer, or this counter offer was, you know, okay, if you know, I'm going to sell my $10 million house, and they say I want to close March 28th. And they would say, if you can close by March 28th, we will give you a brand new Tesla. We'll throw in a Tesla. Mm-hmm. Because if they would have delayed, they would have had to pay hundreds of thousands of dollars in taxes. The problem is that people have decided, so first thing that happened was a bunch of people, like a bunch of super high-end homes transacted, like more than it ever sold. And now they're not selling because the people who just said, forget it, I'm out of here. And some of these people were like, I think Brad Pitt was one of them, Mark Wahlberg. They sold these like over $10 million homes, right? And they basically dodged the tax. Mm-hmm. Then the guy who came up with this idea got super upset, started basically complaining about it, right? Okay, so here's the basic problem. So some of the people that were opposed to this, one of his name is Stark, and this is not from Game of Thrones. Stark and others that argued the tax is counterproductive since the city's losing out on transfer tax revenue. It'd be collecting if sellers were holding back. Wanda, what is transfer tax?
Right, so that's the tax that the seller pays at the time that he or she sells the property. So in Nevada,
it's on all properties.
right. So in Nevada, we just have a state of Nevada transfer tax, but in this case, in LA, they also have their local transfer tax.
But the problem is this: you're counting on like 500 sales of houses over 5 million, and you don't have that now because people are going, I'm not going to sell my $8 million house and give a bunch of money to whoever. So 320,000. So I'm just going to hang on to the house, not sell it.
Right.
They would have sold it. The transfer tax, some of that money would have gone into for the local thing, but now they're not getting any because the tax has gotten so high. People have just said forget it. So they're actually getting less money than they were getting. Now, what's really funny about this is this law firm. First of all, this law firm has a fantastic blog, Irvin, Cohen, and Jessup. But they put this blog post out, 9 ideas to avoid the effective Measure ULA, the new mansion tax. As you go through this thing, let's talk about some of these, okay? One is tenants in common. So there's apparently a clause. What's a tenant in common, and how would that, in theory, how does that work?
Right, so a tenant in common does not necessarily, so for example, if Todd and I are tenants in common on a property, I can own 70% of the property and he can own 30% of the property.
Wait, why do I have to own 30% and you own 70%?
Because I'm greedy.
Okay.
So,
so say we own 50-50.
Okay, if we own 50-50.
And we sell the house for $8 million.
Right, then I have a burden on $4 million and you have a burden on $4 million.
And because of that, we don't pay we're not joint tenants. We basically are selling our interest in the house separately. Right. So we avoid the tax.
Correct.
Okay. Another one is a seller carryback. So, okay, I'm selling the house to you for $4,999,000, even though it's worth $7 million. But you're gonna pay me interest of 20% for 5 years.
Right. So I don't know that they can actually do 20% because it depends on what their usury laws are. But some interest, whatever
a substantial amount of interest, so they end up getting all their money.
Right.
Okay. Another one is they sell the improvements separately.
Well, going back to the one that you just mentioned, one brilliant way to get around that is actually, okay, so I'm selling you the property for $4,999,000. It's, even if it's 5% interest, it's a killer, it's a smoking deal. But you have to, but there's a prepayment penalty. And then that prepayment penalty would cover the rest. Okay. So there are all kinds of ways to maneuver this to make it work.
Okay. So you have a $6 million house. You sell it for $4,999,000. And you write a separate deal saying you're buying all of my personal furnishings for $1 million.
Right.
The couch, the patio furniture.
Right. You can absolutely do that. The other thing that people can do is they can do other creative things. One of the things that you and I were talking about is I said, well, you know what? You can buy my house for $4,999,000, and that's great. And then I have this other house up in Aspen, and you're going to rent that house from me for a couple $1 million for, 1 weekend a month for, the next year. So there you go. Right. So I'm still making my money, but it's a completely separate deal. But they are joined at the hip.
Then this screws up like tax planning because I only paid $4.9 million. That's what the taxes should be based on that. And then here's another one. It's a house. It's on a big lot. It's also got a casita. So you split it into 2 lots. You sell each for $4 million. The main house with the pool is 1 lot, and then the casita, and you make it a deal. You're buying this one, and you're buying this one. You buy 2 separate transactions. You buy them both. It's 2 separate lots. It's actually your advantage to do that because you buy the 2 separate lots, and then now it's already set up for you to sell 2 separate lots when you want to sell.
That's right.
If this tax is still. So the bottom line is people are not going to just roll over and that there was a lot of anger, when people were finding ways around this. And I just thought it was interesting that the law firm locally was like, okay, we can help get you out of this ridiculous
transfer tax. The thing to keep in mind is, okay, so LA did this, fine. But what I don't think anybody's really talking about is this is also impacting the state of California. And what I mean by that is, remember, California also has a transfer tax. So now these transactions aren't happening, and California is not collecting funds either. So in LA's zeal to collect more money, they kind of, wronged the state of California, who then also contributes to LA's budget. So this is all these.
Plus, a lot of these so very famously, Mark Wahlberg, who did sell his house, moved to Vegas. He lives like a couple miles from us, and he's like talking about building like studios here and moving, like they were talking about, he wanted to build like this ridiculous 80,000 square foot production facility and employ like 16,000 people to do like Hollywood 2.0. We're going to do it in Vegas. It's going to be a lot cheaper. And so we just had a measure here to do that. And they were going to do it. I guess they were trying to get tax credits, but didn't get them, or some kind of.
Right. Yeah, they didn't get them, but
But they're still going to do it because it still makes sense.
Well, and it's not complete. I mean, it's dead for this legislative session, but there's always the next legislative session, so they'll work on that. But the point is that there are all these unintended consequences of this measure. And again, kind of circling back to this took effect April 1st, April Fool's Day. So unfortunately, this did not turn out the way the people that put this together envisioned. While I'm not a huge fan of taxation, I am more a fan of trying to find workable solutions rather than just throwing money at a problem. I understand that homelessness is a big problem, and I don't dispute that. I think that maybe incentivizing affordable housing is a better way to handle it rather than being punitive. I don't think taxation is the answer. I think offering incentives to provide housing is a better way to handle it.
The worst part is they intentionally underallocated, not knowing how much they would actually get. They didn't allocate very much money to like help homelessness. The rest of it just went to the general fund anyway. So, and then their argument was, well, 57% of people voted on this because 98% of all people have a house under $5 million. So they're like, oh, those people will pay it. So now they're going to have to figure out a way, if they actually want the money for this, how they're going to get it. It's probably just going to end up, they're just going to have some tax that everyone pays some way. They'll just find a way to tax everybody. But, the problem is when you push on a balloon, the balloon either moves or it pops. And I think, Nevada has certainly been the beneficiary of some economic disincentives that have happened in California. And fortunately for us, it's high. We never had a luxury market until the last decade, not really a luxury market. Now we have like a full-blown luxury market. And of course, Wanda knows all about it.
So, but keep in mind that in California, a $5 million home is not exactly a mansion, okay? It's not, for $5 million, you can get something substantially more exciting in Las Vegas than you can in LA. So I think that's part of the argument that's happening there, is that they're saying, hey, look, we understand that you want to tax the mansions, but $5 million is not really a mansion, not compared to other parts of the country.
I don't think it would matter. People still going to find a way. You get them to the 30 million range, we're going to tax them a large percent. They're still going to find a way around it.
Right. Because, like I said before, people of means tend to be well educated, and they tend to have access to professionals that can help them navigate the tax code. That's really, that's kind of my argument as far as flat tax in general, is that right now the person with the best tax advisor and accountant gets to win. While if there's a flat tax with no deductions, then I think that's a little more fair for everybody. But it's another video.
Yeah.
All right. So I'm sure you guys have lots of opinions, and you.
Yeah, because this got a little. It's not really political because it's not really party. It's just tax policy.
Right. So I'm sure everybody has opinions, and I'm sure some of you completely disagree with what we've put out, and that's completely
fine. And we
fine.
weren't giving your political opinion. We're just telling you what happened.
Right.
Like, this is just what happened.
Yeah. So please feel free to leave us comments. You don't have to agree with us. Let us know what you think. If you are in LA and you have an opinion on this, we certainly want to hear from you as much as everybody else, because obviously that this impacts you, whether or not you're in that price point where you do have to pay the tax or not. It still impacts you because it has to do with what's happening in your community. So please like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.